When people hear agriculture investment, they either think of billionaire land barons or people with sunburns and pitchforks. But in reality, agriculture is one of the most underrated and accessible ways to build wealth, diversify your portfolio, and tap into the one thing humans literally can't live without: food. Here are 15 agriculture investments and business ideas you can start today. Number 15. Agriculture-themed ETFs. Agriculture-themed ETFs let you invest in companies that are transforming agriculture. From vertical farming to AI-powered irrigation systems, it's one of the easiest, most passive ways to bet on the future of farming without leaving your couch. Number 14. Farmland REITs. Farmland REITs let you invest in income-producing farmland with zero boots on the ground. The companies own the land, lease it to farmers, and pass rental income along to investors via dividends. It's farmland without fences, paperwork, or any actual farming. This is a strong diversification tool for portfolios heavily weighted in stocks and bonds. It also provides exposure to physical assets that tend to appreciate over long periods of time. Farmland REITs can offer inflation hedging and may perform well during economic uncertainty. Number 13. Crowdfunded farmland platform. These days, there are plenty of platforms that give you partial ownership in real US farmland. You earn income from rent and enjoy land appreciation, just like a traditional real estate investor, but in crops. Most minimums range from $10,000 to $20,000, and it's 100% passive after buy-in. These platforms often include extensive due diligence, making it easier for non-experts to enter confidently. Farmland has historically shown low correlation with equities, making it a great hedge in volatile markets because nothing says diversified investor like owning 0.0003% of a wheat field in Iowa. Number 12. Timberland Investments. Timberland Investments involve buying land with commercial-grade trees, used for lumber, construction, and paper. Returns are long-term and low drama, and bonus, the trees are inflation-resistant. It's not sexy, but it's quietly profitable. Oh, and trees don't go bankrupt. Timberland can be harvested strategically, allowing investors to time the market for maximum value. Many timberland assets are eligible for conservation or carbon credit programs. The biological growth of trees means that your asset literally increases in size, and no dividends required. Number 11. Aquaponics and hydroponic systems. Now, these water-based growing systems let you raise food in your garage, backyard, or small warehouse. It's farming that makes you feel like a Bond villain. Tanks, tubes, and total climate control. The startup cost is higher, sure, but production is fast and consistent. It's clean, efficient, and scalable, especially for niche produce. These systems use significantly less water than traditional farming, making them more sustainable long-term. Demand for locally grown pesticide-free greens is rising. Number 10. Microgreen or herb farming. Microgreens grow fast, sell for premium prices, and only need a shelf and some LED lights. You can run a micro farm out of a closet and sell it to restaurants, farmers markets, or directly to consumer boxes. Low space, low cost, high ROI. This is the entry-level MVP of agriculture investments. With short growth cycles, this model allows for rapid iteration and income generation. It's ideal for testing small business systems before scaling up to larger agricultural ventures. Number 9. Community-supported agriculture partnerships. You provide upfront funding for a season's worth of produce, and farmers pay you back with food and profit sharing. It's part investment, part food security, and 100% local. You get dividends in tomatoes, which is oddly satisfying. CSAs create a direct relationship between capital and productivity, which helps stabilize small farms. This model also builds stronger community ties and supports regional food resilience. Number 8. Beekeeping and pollination services. Beekeeping generates income from honey and pollination contracts. Startup kits are pretty affordable, and the demand for pollination is climbing as bee populations struggle. It's nature's most undervalued cash flow machine, with wings. Commercial pollination fees can outpace honey revenue, especially during almond or berry seasons. With relatively low land requirements, beekeeping scales well in suburban and rural environments. It supports local ecosystems, which improves crop yields and biodiversity. Number 7. Poultry or small livestock. Small-scale livestock can produce regular income from eggs, meat, milk, or breeding stock. With demand for pasture-raised, organic, and local protein rising, this side hustle pays in both feathers and dollars. Chickens, they aren't glamorous, but they're economically efficient. Livestock ownership also opens up opportunities for government grants or age-specific tax incentives. It offers one of the lowest barriers to entry for physical agriculture, especially if zoning is favorable. Hey, if this video has been helpful so far, please hit the subscribe button. We break down trending money topics just like this every week. Number 6. Agricultural waste upcycling. Agricultural waste upcycling is the art and hustle of turning farm scraps, things like spoiled crops or manure, into sellable, sustainable products. We're talking biochar, natural fertilizers, mushroom substrates, animal feed, and biodegradable packaging. It's the part of agriculture that says, one farmer's trash is another entrepreneur's treasure. This is one of the most overlooked opportunities in the AG space, and one of the most accessible. Why? Because the raw materials are basically everywhere and often free. Number 5. Value-added processing. Jams, dried fruit, pickles. Turn raw produce into shelf-stable products with higher margins. This boosts profitability while reducing waste. You're not just making food, you're making brand equity. Value-added goods also allow for e-commerce expansion, giving you access to national markets. Regulatory hurdles are lower than full-scale food production, making it a great start for first-time operators. Number 4. Farmers market stall business. You can grow your own produce or source from nearby farms and resell. Low overhead, great cash flow, and direct customer feedback loop. Also, free samples equals built-in marketing. Markets provide immediate validation of product demand, letting you test pricing and packaging on the fly. They are also great for building a customer list and brand presence without paying for a storefront. Number 3. Greenhouse farming. Control the weather, grow year-round, and stop worrying about frost killing your profits. Greenhouses boost yields and reduce risks. It's like crop insurance, made of glass and steel. Greenhouses enable faster crop turnover and allow you to meet off-season demand, often at premium prices. They are especially effective for high-value crops like tomatoes, herbs, or specialty lettuces. Number 2. Land flipping. Buy, improve, sell. Buy farmland below market value, improve infrastructure or zoning, and sell to commercial growers. This strategy is all about increasing land value through insight, not hard labor. It's pretty much real estate investing with a hat. Improvements like fencing, water rights, or access roads can drastically boost resale prices, because demand for high-quality farmland is rising, and well-placed flips often move quickly. This model rewards those who understand regional agricultural trends and land use law. Successful flips rely on pre-purchase planning, not post-purchase hope. Number 1. Revenue sharing with experienced farmers. You fund the operation, they do the work, and you both split the profits. You bankroll the beans, they do the planting, and you still get to humbly brag about your harvest at dinner parties. This is smart money meets smart labor. No sweat equity required. This setup allows you to participate in agriculture without needing technical skills or land access. Choosing the right partner is critical. Their reputation and track record directly impact your ROI. Written agreements should clearly define responsibilities, payouts, and risk sharing. It's these model scales that, once you've done one deal well, you can easily replicate it with multiple partners. Which one of these ideas would you try? Or which one surprised you the most? Let us know your thoughts down in the comments below, and tell us how hands-on or hands-off you'd go with your own agriculture portfolio. That wraps up the video for today. If you found this helpful, be sure to hit that like button, subscribe for more smart moves that actually build wealth, and share this with someone who thinks investing only happens on Wall Street. They need to hear this. Oh, and don't forget to check out the next video queued up on your screen.